Hello students, how are you? I hope you are well and safe at your home. And today I am here with a new video with a new concept on chapter number 2, change in profit sharing ratio. And topic is revaluation of assets and liabilities. Yesterday we studied that same topic, revaluation of assets and liabilities. Whenever profit sharing ratio is changed among the existing partners revaluate of assets and liabilities, because in balance sheet assets and liabilities are recorded at book value, and this book value is changed due to passage of time. That means realizable value of assets and liabilities are changed, so that partners want to record it. And there are two methods for recording of revaluation of assets and liabilities. Method number 1, which I taught you yesterday, when revised values are recorded in the books. First method, in yesterday video you studied that revised values are recorded in the books and the balance sheet of the reconstituted firm is assets are recorded at new value at realizable value. And today we are studying about the second method. Second method is when revised values are not recorded in the books. In this method, partners do not want to record the revised value in the books. They record the assets and liabilities in balance sheet on their old values, on their book value. They don't record it in revised value. Sometime in question it is given some indicating point that adjustment recorded by single adjustment entry. हमें क्वेश्चन के अंदर डिफरेंशिएट कैसे करेंगे कि ये फर्स्ट मेथड से सॉल्व करना है या सेकेंड मेथड से सॉल्व करना है. तो for this a clue is given in the question. That clue is adjustment recorded by single adjustment entry. That means you record the adjustment by single adjustment entry, not one entry for one asset. And second indication point is don't affect. That means वो अपनी बैलेंस शीट को इफेक्ट नहीं करना चाहते. डोंट इफेक्ट द और चेंज द वैल्यू ऑफ एसेट्स एंड लाइबिलिटीज. So these are the indicating points in the question that by this you use second method. And in this method revised values are not recorded in the books. That's why इसका इफेक्ट क्या होता है. तो इस मेथड के अंदर हमें रिवैल्यूएशन अकाउंट, एक नया अकाउंट जो हमने कल सीखा था, दैट इज नो नीड टू प्रिपेयर रिवैल्यूएशन अकाउंट. एंड इन दिस मेथड इफेक्ट ऑन द बैलेंस शीट, in balance sheet assets and liabilities are recorded at same value which is given before the reconstituted firm. And second effect is that only change in partners capital or current account balances. ये जो revised value we are not recording in the books, इसका effect only show on the partners capital or current account balances. So now I explain the steps, which steps are followed to solving this method. First of all, step number 1, first of all we calculate a net effect of the revaluation. Revaluation पर क्या net effect रहा? Revaluation means what is the value of increase of assets, what is the value of decrease of the liability, and how much value of assets it decrease and how much value of liability is increased. Same as revaluation account, but we don't prepare revaluation account. We Calculate this net effect by the help of simple working note or by the help of table. In this method, increase in value of asset is positive, that means profit. Decrease in value of liability is also positive, that means profit. And decrease in value of asset, assets की value decrease हो गई है, that means loss है, and loss is shown in bracket items. Increase in value of liability, that means loss is increases. Liabilities की value increase हो गई है, that means our loss is increased. But after that, we will find the net effect. Positive total is more than negative total, or negative total is more than positive total. If the positive total amount is more than negative, then it is profit, and if negative loss is more than profit, then it is loss. Second step is to find the sacrificing and or gaining ratio. In the second step, we find the sacrificing ratio or gaining ratio by using the formula old ratio minus new ratio. That is the step number second. And now step number third, calculate proportionate amount of the net effect of revaluation. Here we calculate the net effect, step number 1, and in step number 2 we finding the sacrificing or gaining ratio. In step number 3 we find the calculate proportionate amount of net effect on the revaluation account. Revaluation, that means total effect multiply gaining ratio or sacrificing ratio. And step number 4, pass journal entry. In step number 4, we pass the journal entry in the books of account for gain on revaluation. If positive balances is more than negative balance, then gain, and we give the journal entry gaining partner capital account debit to sacrificing partner capital account. And for loss, loss means negative items are more than positive items, that is considered loss. So we give the journal entry reverse entry sacrificing partner capital account debit to gaining partner capital account. By this journal entry you observe only gaining partner capital account is debit, that means gaining partner capital balance is decrease, and sacrificing partner capital account is increase. And in this journal entry, sacrificing partner capital account is decrease and gaining partner capital account is increase. That is the shown in only change in partners capital or current account balances. Now I will explain this topic with the help of an question. Question number 41 of D.K. Goyal book. And in this question, P, Q and R in partnership sharing profits and losses in the ratio of 5:4:3. On 31st March 2019, their balance sheet was as follows. Cash at bank, sundry debtors, stock, furniture and plant and machinery. In liability side, sundry creditors, outstanding expenses, journal reserve and capital accounts P, Q and R. It was decided that with effect from 1st April 2019, the profit sharing ratio will be 4:3:2. For this purpose, the following revaluations were made. Furniture be taken at 80% of its value, that means value decrease. Stock be appreciated by 20%, stock value is increased. Plant and machinery will be valued at rupees 4 lakh. We compare it, it is increase or decrease. Create provision for doubtful debts for 10,000 on debtors, that means debtors are decreased. and outstanding expenses be increased by rupees 3000. That means outstanding expenses, liability is increased, that is loss. Partners agreed that altered values are not to be recorded in the books. That means they don't want to record revised value in the books, and they don't alter the recorded value of books, and they also do not want to distribute the journal reserve. Same second point, they don't want to distribute the journal reserve amount. You are required to post a single journal entry to give effect to above. Also prepare revised balance sheet. In this question it is given clear that you have to pass a single journal entry of this effect, revised value and distribution of journal reserve they don't want to distribute. And after that you prepare a revised balance sheet of reconstituted firm. So in this method, first of all, we prepare a table showing the net effect. We can say table or working note. First of all, first adjustment is furniture is to be taken as 80% of the value, and furniture value is 60,000, and 60,000 80% value is 60,000 multiply 80 by 100. That means now furniture value is only for 48,000. That means loss is 12,000. 60,000 minus 48,000. So you record here by the help of table loss on decrease in furniture, that is 12,000, and second is stock is to be appreciated by 20%. Stock value is 3 lakh and we appreciate it by 20%. That means amount is 60,000. Stock is appreciated. That means value is increased. You can write here profit on increase in stock. That is 60,000. Third adjustment is plant and machinery be valued at 4 lakh and its book value is 4 lakh 20,000. Firstly, machinery value is 4 lakh 20,000. Now revised value is 4 lakh. That means 20,000 is loss. So you write here loss on decrease in plant and machinery, that is 20,000. And fourth adjustment is create a provision for doubtful debts. ये भी loss है. Loss on provision on debtors is equal to 10,000. And next adjustment is outstanding expenses be increased by 3,000. So loss on increase in outstanding expenses is equal to 3,000. These all are losses, and profit is only on increase the value of stock, and total loss is 45,000. Loss is 45,000 and profit is 60,000. That means net effect on revaluation is equal to 15,000 profit. Clear? And after that, in this question, it is given that they don't want to distribute the journal reserve. And our second step is find sacrificing ratio or gaining ratio. And in this question, old ratio is 5:3:1. Old ratio 5:4:3, and new ratio is 4:3:2. Then you calculate firstly A. Use the formula old ratio minus new ratio. Old ratio minus new ratio is equal to 5/12 minus 4/9. 5 plus 4, 9 plus 3, 12. 5/12 minus 4/9. LCM is 36. Then that means answer is negative, and this A partner gained. And now turn is B partner. B old ratio is 4/12 minus 3/9. LCM is 36. 3, 12, 0/36. That means it is neither gain or nor sacrifice. Now turn is C. Old ratio is 3/12 minus new ratio is 2/9. LCM is 36. And its answer is positive. That means C partner sacrifice. In this transaction, change in profit sharing ratio, A is gain by 1/36 and C is sacrifice 1/36. Now step number 3, calculate proportionate amount. And we calculate A amount, A gain, now you observe that net effect on the revaluation is 15,000. जो प्रॉफिट हुआ है वो 15,000 का हुआ है, लेकिन in this question it is given that partners do not want to distribute the journal reserve. पार्टनर जो है जनरल रिजर्व की अमाउंट को भी डिस्ट्रीब्यूट नहीं करना चाहते. बाय दिस मेथड जनरल रिजर्व अमाउंट इज आल्सो डिस्ट्रीब्यूटेड अमंग द पार्टनर्स बाय द गेनिंग एंड सैक्रिफाइसिंग. सो सेम इफेक्ट हो जाएगा. सो वी विल ऐड हियर अमाउंट ऑफ जर्नल रिजर्व दैट इज given in balance sheet 75,000, and that means total amount is find the proportionate amount of 90,000. इस क्वेश्चन में हमने proportionate amount किसकी फाइंड आउट करनी है, 90,000 की, क्योंकि जनरल रिजर्व भी डिस्ट्रीब्यूट नहीं करना पार्टनर्स ने. इसमें भी सेकंड वाला मेथड लगाया जाएगा. व्हेन पार्टनर्स डू नॉट डिस्ट्रीब्यूट द रिजर्व एंड एक्युमुलेटेड प्रॉफिट, देन दिस टोटल अमाउंट इज डिस्ट्रीब्यूटेड अमंग पार्टनर ऑन द गेनिंग पार्टनर पे टू द sacrificing partner. So same method used in both of the topic. So we calculate the proportionate amount, both of the amount. A again 90,000 multiply 1 by 36, that is answer is 2,500. Now we calculate C sacrifice is equal to 90,000 multiply by 1 by 36, that means 2,500. So proportionate amount net effect is the equal. And now step number 4, we give the journal entry in the books of accounts on 1st April 2019. A is gain, then we write A capital account debit by 2500 to C capital account 2500. And we write the narration: adjustment of assets and liabilities revaluation. Now, last step, we frame the balance sheet of the reconstituted firm. लास्ट स्टेप में हमने reconstituted जो है हमारी नई फर्म है उसकी हमने बैलेंस शीट परफॉर्म करनी है, प्रिपेयर करनी है. नाउ बैलेंस शीट एज ऑन 1 अप्रैल 2019, क्योंकि ये चेंज किस दिन हुआ, 1 अप्रैल 2019 को हुआ. सो वी मेंटेन न्यू बैलेंस शीट ऑन 1 अप्रैल 2019. In this balance sheet, there is no change in the value of asset. We record same as which is given in our question. For example, cash in bank, first asset, cash in bank, rupees 40,000, same. Next asset is debtors, sundry debtors, amounts are 2,10,000. Next is stock. Stock value is rupees 3 lakh. After that, furniture, same book value 60,000. And last asset is plant and machinery. Book value is 4,20,000. No change in the balance sheet assets amount. So total is same, 10,30,000. Now come on the liability side. First liability is creditors. Sundry creditors, same amount is equal to 50,000. After that, outstanding expenses, same value, 5,000. Now journal reserve, because in this question it is given that partner do not distribute the journal reserve. So journal reserve is shown as usual, which is shown in the balance sheet. Our last step, find the capital accounts. And capital accounts balance is given P, Q and R. P capital account balance is 4 lakh, but now it is decreased by 2500 because debit हो रहा है A capital account का. So we subtract here. $4 lakh minus 2500, then balance is 3,97,500. And B partner, no change in the capital of B, that is 3 lakh. And C capital account is credited, that means it is increased by 2,500. Old balance is 2 lakh and new balance is 2,02,500. Then total become 9 lakh and balance sheet total is 10,30,000. I hope you understand this concept. And question also, when the partners do not record the revised value in the books, first of all we find the net effect of the increase and decrease value of assets and liabilities with the help of table or working note. After that, second step, find sacrificing or gaining ratio, and step number 3, calculate proportionate amount, and fourth step is give the journal entry which partner is gain In case of profit, gaining partner is debit and sacrificing partner is credited. And in the loss case, entry become reverse. Sacrificing partner capital account debit to gaining partner capital account. And after that balance sheet, there is no change in the value of assets and liabilities, only change in the balances of partners capital account. Okay. Now you do practice of the related sum. Thank you. Have a nice day.